You're listening to On Shifting Ground. I'm Ray Suarez. At the risk of stating the obvious, without capital, there's no capitalism. If we use the recent news of Silicon Valley Bank as an example, once the money dries up, everything else grinds to a halt, jeopardizing an entire economic system. Sometimes the only thing holding back a trader in a marketplace, a small employer in a workshop, or a fee-for-service worker is access to a small amount of cash to buy a physical space, inventory, or equipment. But for many of the world's women, the simple act of borrowing a little bit of money turns out to be really complicated, heavily restricted, or exceedingly expensive. And it's leaving a lot of women out of the post-pandemic recovery and leaving a lot of money on the table. Ellen Iskenderian asks why our current financial system fails women and how we can leverage potential to accelerate international development. She's the author of There's Nothing Micro About a Billion Women, Making Finance Work for Women. And she joins me now. Welcome to On Shifting Ground.
Thank you so much, Ray.
Well, what is the problem? People want to make money, and on the other end of that relationship, there are people who are strivers, hard workers, smart, inventive, and they can't get what they need to unlock their own potential.
So yeah, as you noted, that's been the organizing question of my career and of the organization that I'm privileged to lead, Women's World Banking. I think it's probably worth maybe taking a brief step back because there were so few silver linings in the pandemic, but frankly, moving people into the formal financial system was indeed one of them. And that was largely because something like 193 federal and local governments made COVID relief payments available largely through digital technology, through the cell phone. And as a result, you saw millions of people brought into the financial system. In just one amazing example, India made their first COVID relief payment when we first went into lockdown, only payable to women and only digitally. And literally within a matter of a few weeks, you had 25 million new bank accounts opened primarily by women. And so that's actually been pretty exciting. There's a database called the Global Findex that is our main tracker of formal financial services. And since the last time those numbers were collected about 3 years ago, we've had 250 million women brought into the formal financial system. So big progress. But I think the question now is how do we design products that keep those people in the system? And how do we make it relevant to their lives?
You'd hate to think that it takes a worldwide pandemic to spur the kind of innovation that you're talking about, the policy inventiveness, the sort of solution search. We'd like to do it short of a disease ravaging the planet, you know?
Right. It's true. But it's so good that you called on the word innovation, because I think that, again, has been a very exciting part of the fallout, if you will, from COVID. You've seen more financial institutions sort of recognizing that interlinkage between people saving. For the first time, very poor people had amounts in a savings account that were, quite significant. In many countries, Peru and India, as we were talking about, women had larger balances than men. And we found, interestingly, that a large part of the reason people save or maintain balances is in order to borrow. And so we've been really very excited in India, in Nigeria, in Indonesia, several countries working with sometimes some very large banks reaching millions of customers, making that link. If you save on a regular basis, you'll have access to capital that you can apply in the ways that you mentioned.
I was in a township outside Johannesburg and touring what was supposed to be a kind of low-level incubator. They basically put a bunch of shipping containers in a field, ran electricity to the field, and said, look, if you've got a business, open up in the containers. So I was talking with a woman who was selling sheep parts, very much the appetite of the area, and she was very good at it. Every morning, she went and got this consignment of sheep parts and sold out by 2 o'clock in the afternoon. So I said, well, that's great, right? I mean, you've got a regular base of clients. You're making a little money. This is great. She said, oh, I could do so much better, but I can't afford a freezer. Out of each day's proceeds, I buy tomorrow's sheep parts. But boy, if I had a freezer, I could carry more stock, more kinds of things, and just sell a lot more. So I said, well, why don't you buy a freezer? And she gave me this tale of woe about going to banks over and over again and them demanding piles of documents and documentation and affirming cash flow and all this stuff. And she didn't have any of that. She had an ongoing business, a worthwhile business. There has to be some value embedded in that. Well, I was talking on South African radio about this encounter with this woman, and somebody gave her a freezer. Now, on one level, that's a feel-good story, but that's not how we're going to fix this problem.
Exactly.
This woman should have been able to walk into any bank and borrow enough money for a freezer. There seems to be a kind of ossified structure, or a structure built for men, or a structure built for a clerical state that just didn't meet the realities of the way this woman made money.
Wow. Amazing story. And you're absolutely right. No kind of systemic problem was solved with the gift of the freezer. Untangling some of the things that you mentioned, the number one barrier to women's ability to borrow from formal financial institutions is the lack of collateral. And that either stems from an inability to own real estate or inherit real estate in some places, or just their lack of ownership of a piece of land in their own names, having title to that could be assigned to a bank. That's why one of the things that we've been working very closely in a number of countries, and is a little wonky, but it's important, and it's what gets small businesses funded in the United States, is we've been working with a number of countries to create movable collateral registries. So in the case of your woman with the sheep parts, she would be able to borrow using the freezer itself as her collateral. But in most jurisdictions, including South Africa, the ability to use anything other than real estate or land as collateral is prohibited. So changing that policy is enormous. And then I think the other thing that we're very excited about is the possibilities opened up by fintech, that you've got companies all over the emerging markets that are, scraping cell phone data or using other sources of data to create credit scoring algorithms and the ability to make a loan against something other than the traditional collateral, or as you said, tons of documentation and audited financials. But they're sort of going around that and establishing other data that gets them comfortable with lending. And so we've invested in a number of these companies. We're supporting them through the Women's World Banking NGO, but we're very excited about the opportunities from fintech.
It looks like the developing world, because it never got anchored with copper running into individual houses and all that, is ready for that leap ahead using the telephone, the mobile phone as a tool. And I got to tell you, I was just in China for 4 months, and I carried the equivalent of like $40 in my wallet in renminbi and never spent it because I used my phone literally for every financial transaction, every single one. And it showed me the possibility of how this stuff could leap ahead. I bought from vendors on the sidewalk. I bought from stall holders in markets, and they were able to deposit my money directly into their bank account with us waving phones at each other, basically. And we seem to be way behind that here in the United States.
The whole idea of leapfrogging is enormous, but it does bring home another issue with women that we do need to be cognizant of. There is right now about an 18% gender gap in the ownership of smartphones. And in some countries, primarily in South Asia, that's considerably larger. We saw real progress during the pandemic. And now unfortunately, we've seen a bit of a slipping back. So making sure that women have access to that technology and are confident using it is going to be critical so that as these countries leapfrog, they're not leaving the women behind.
And they're not carrying piles of cash. In a lot of places in the world, a woman with a great big wad of cash is a vulnerable person, and I think we'd want to avoid that. I mean, we understand how we got here. Part of it is they heavily regulate banks. They want to know that people aren't using them for money laundering or breaking currency restrictions that exist in a lot of countries, using it to smuggle money out of the country. Okay, fine. So there's a lot of laws in place. But I wonder if people are looking in these countries, in the finance ministries, in the banking regulators, looking for ways to loosen up these laws in ways that facilitate economic growth without throwing everything to the four winds and saying, okay, criminals, have at it. I mean, there's a reason why a lot of these restrictions exist in the first place, but that wouldn't seem to apply to a woman selling cassava melons.
You touch on so many important points there because it does really start in the ministries of finance, in the central banks, recognizing that without financial inclusion, what this concept of bringing people into the formal financial system is known as, without that, there's really just such a rein on a country's growth and possibilities for growth. So you've seen the vast majority of developing countries in the last 5 years having established national financial inclusion strategies. Unfortunately, in a lot of cases, they didn't disaggregate that between men and women. And so they may have made some progress on men's inclusion, not so much on women. So that's kind of where we're coming in. We're doing a lot of great advisory work with policymakers, but there's an awakening and a realization on the part of policymakers. And I think the state-owned banks, say in India and Indonesia, that yes, have a motive to make money, but are also led by that financial inclusion mission of their government ownership, where we've seen some of the most exciting progress and a willingness to open up. We're working with one of the largest state-owned banks in Indonesia, where we discovered that historically, customarily, midwives have had a relationship with their patients where the women have saved with the midwife, have saved money with the midwife throughout her pregnancy to pay for the care and then any postnatal care as well. We digitized that whole process with this bank, and then we made the midwife herself, because she's a trusted member of the community, to actually, sort of open another business as an agent for the bank to offer digital financial services in these really remote areas. So there's some, again, really clever stuff. Just one quick other thing, we're seeing surprising amounts of innovation in financial inclusion in these state-owned banks. When we take this opportunity to private sector banks as well, they'll often say, well, a savings account, that sounds good. Let's establish a savings account. But what's been really gratifying is in like 3 months' time. I mean, it's not a lot of time. When they see just how bankable this segment is, how regularly this low-income segment is depositing money, they then come back and they say, help us figure out a lending product as well. So I think some of it is just getting them on board with this customer base that, was always about charity or about high risk in the past.
You mentioned the gender gap when it comes to financial services. How do you undo that? There are a lot of countries in the world where women are producing most of the farmed product that people are eating every day, but it's men who are borrowing the money for seed and fertilizer, where women are really the pillar on which the retail sector in food is built, but it's men who own the companies and the distribution networks and the trucks and the middlemen. And in a way, it's no surprise that the financial services industry reflects that kind of world where a woman will bring a male member of the family to try to negotiate the loan, where even if she doesn't, there's just such this heavy weight of bias. I don't know how you unlearn that. I don't know how you regulate around it. Can you give us some examples of how it could work, how it could look?
Well, one thing that's been really effective, and we've seen this in places where we've worked or in other places where we've observed, there's a pretty close correlation between having more women in the governance, in the leadership, in the management, in the boots on the ground, making those loans in a financial service institution, and more women clients. There's a really close linkage between those two things. So we do a lot of leadership work in our investment portfolio. We are quite strict in requiring a number of women on the board, a number of women in senior leadership as part of our investment. And we're bringing in other investors together with us to insist on those same things because we do see so much of a link. I mentioned the women agents in Indonesia. We've seen some really amazing data in a number of countries where both men and women are more comfortable enacting or interacting in a financial transaction with a woman agent. It was so funny, the number of men who said, I don't necessarily want another man to know that I don't understand how to make this transaction on my phone, but I'm comfortable asking a woman, and she's a good explainer of what we're trying to do here. So I feel so strongly that women in the system, women making the decisions, moving the way that their financial institution approaches women clients is going to be such a big part of that solution.
You're listening to On Shifting Ground, produced by World Affairs in San Francisco. Investor and philanthropist Mary Ellen Iskenderian asks why our current financial system fails women and how we can free up the potential of millions of hardworking people. More after the break. I think at a time where in the developed world, where the rich world, we're trying to stop using gender descriptors and stop talking about men and women as if they're different kinds of customers, the extent to which people are still conscious of gender or have to be still conscious of gender in other places in the world, it wouldn't scan, really. When I was covering Oportunidades in Mexico and went to the weekly session where they give women conditional cash transfers and only women. It's, embedded in the structure of this program to support family well-being that you don't give the money to the men.
Right.
And if you talked about that in the United States, hey, let's have this program where we give government money just to women because we don't trust men. I don't think people would be ready for that conversation necessarily, but it was completely understood down there.
Absolutely. No, I think, that's so interesting, the point you're making about trying to de-gender so much of our dialogue, our conversation. One of the things that we just push so hard for on the regulatory side is insisting that regulators collect and make banks report gender disaggregated data so that we know what products are women using? How are they using it? Where are they using it? Where are they not taking? Where are they kind of falling off? Are they just doing the savings and not the borrowing? So without that data, how do you know who your client is? How do you know how they're using your service? We'll go into a financial institution that will have hired us because they think they need sort of a pink product. And we'll look at the data and we'll say, well, I don't think you need a new product. The women that you've got are really liking the product that you already have. But maybe in Pakistan, for example, the way you bring a client into your organization is not making her go by herself into a small shop that's probably owned by a man. And then when she gets there, she has to give him her cell phone number. So you've got to be consistent with the social norms. In the instance that we were just talking about, we kind of took it one step further with this mobile network operator that wanted to reach out to women, thought they needed that pink product. We teamed up with Unilever, who had done a great job in setting up a nationwide system of shopkeepers, women shopkeepers that were highly trusted. And we then trained them on financial services. This organization that I'm talking about, and we don't always get results like this, but it was really so startling, went from 12% women clients to 46% in 4 months' time. There was so much pent-up demand once you offered the service in a way that was comfortable and that was consistent with the cultural norms that the woman felt comfortable with.
Are there battles that you have to fight over and over again, that a good news story or proof of concept isn't enough on its own because there's inertia that has to be overcome? Do you have to keep having these arguments, bringing the message out there again and again?
Oh, absolutely. I mean, Oliver Wyman, the consulting firm, estimated that there is $700 billion in revenue annually that the financial system, so, banks, insurance companies, asset managers are not tapping into, not because they're not, including all women, but just that they're serving men and women at parity. And what frustrates me enormously is to say that there's that kind of opportunity and not see financial service providers take it up just is so frustrating. But I do think we are slowly winning the battle as we convert more of these institutions into recognizing this client base is a really lucrative one.
Are we evolving toward a world where women doing these businesses will engage in banking without banks, where their whole concept of what banking is will revolve around this phone in their pocket rather than a brick and mortar edifice with fancy windows and a quiet, hushed marble lobby?
Yeah, we're there already.
Oh, we're there already. Okay, tell me about it. If you're a woman working in Maputo or Dar es Salaam or Bangkok, what's your experience of banking?
If you have access to the phone, and that's no joke, that having access to that technology is really key. But if you've got it, that is the way you are interacting. We saw a fascinating thing happen during the pandemic with so many of these, exactly the businesses you've been describing, small individual women's businesses moving online, becoming online businesses, being able to reach a much broader community. And the only way that's going to work for them is digital payments, digital credit. So we're there already. It's a really exciting time.
Are costs such that they don't in themselves become an impediment, a barrier? Is data cheap enough in these countries?
Data is still too expensive in so many places, so that's an important factor, but it's a bit of a chicken and egg as you see more people interacting. The number of businesses that transact almost exclusively over WhatsApp, so really simple technology, is quite extraordinary throughout Africa and East Asia in particular. So data is still too expensive. Getting the cell phones in the hands of women and making sure that they're comfortable. But once that happens, so much is being unlocked.
Where are the frontiers? Where are the places where you're just now starting to win some of these arguments and showing what you've been telling people is true?
Well, I think it's this kind of crucible moment, if you will. I mean, I thought it was a really almost cautionary tale for us. As I mentioned, we saw hundreds of millions of women come into the formal financial system in the data this last time around. You saw the gender gap in financial services go from this absolutely unbudgeable 9%. It was 9% forever, down to 6%. It's part of why I am quite concerned about inflation and the impact on small businesses for women. You're seeing in so many countries higher interest rates leading to higher repayment of loans. Women, small businesses on the whole, are charged higher rates, have a higher collateral requirement, and are more often required to have a guarantor. All of that becomes more difficult if interest rates are going up. So this is a dangerous moment. It's a great moment of opportunity, but it's a dangerous one as well.
Are men getting let off the hook in this conversation? I mean, when they show up at all, they're often as roadblocks and impediments. What's going on? I hate to have those conversations where, here comes retrograde, knuckle-dragging men. But here we are where they want to make sure their name is on the account. They want to know how much money their wives have, and on and on and on. You would think that they would see a lot of mutually beneficial outcomes here, and that would be enough to end the argument.
Well, and I'm happy to tell you this is something we track religiously. It's so important. Are women gaining in household decision-making, household bargaining power, and the data is really pretty unequivocal. If she's got money that she's negotiating with, he kind of has to listen to her. That study I mentioned earlier about the savings accounts, one of the other impacts that we saw for the women continued to save, they maintained a much higher level of bargaining power in their homes. And what was really interesting is the number of women who, when they stopped savings, their husbands started making many more decisions about the wives' businesses. Whereas if the women were saving, if the women were putting money away in an account that everybody in the household recognized was theirs, the husband tended to stay out of the business and let the woman run it.
I want to leave people with some good examples of what you're trying to get accomplished and the way these partnerships end up benefiting people, not in, cruising altitude of 35,000 feet kind of ways, but right down there in the neighborhood. Give us some idea of what's going on there when this is working.
So let me just tell you about a story that was so meaningful to me. We're working with a large Indian bank developing this product I was describing earlier, where if you make 6 savings deposits on a regular time schedule, you become eligible for an emergency credit line. It's basically deposits of roughly $5 each, and the credit line is about $120. So we're talking pretty small numbers. And in one of the regions that we were working in, there were really bad floods in April of this past year. We saw a dramatic difference between the household farms and the women farmers in particular, who had access to that savings that they'd been building up, had access to the emergency credit. They kept their kids in school throughout the flood and post-flooding period, and they were much faster to replant after the flood was over than their neighbors who hadn't been saving, didn't have access to the emergency cash. So at that very basic level, access to $125, it sounds like nothing, but it really can be the difference between keeping the farm, keeping your kids educated, and moving everybody forward rather than losing a year because of the flood.
Mary Ellen Iskenderian, great to have you with us on Shifting Ground.
Thank you so much. It's been a great conversation.
Mary Ellen Iskenderian is president and CEO of Women's World Banking, the global nonprofit devoted to giving low-income women in the developing world access to the financial tools and resources they need. You've been listening to On Shifting Ground, produced in partnership with KQED, with funding from listeners like you. Today's episode was produced by Elise Manukian and Andrew Stelzer. It was mixed and mastered by Matteo Schimpf. Additional production and engineering were provided by Rob Spate. KQED's Jim Bennett is our technical supervisor. Jared Sport is our executive producer. Philip Yun is CEO of World Affairs. Our music is from Blue Dot Sessions. I'm Ray Suarez. Thanks for listening.